Hi traders, welcome to another episode on the trades we missed last week. So last week we talked about price coming to this demand area to give us a bullish trade, just like this. We expected price to come to this area here like this and give us a bullish trade to the upside. So price tapped into this area and actually gave us a bullish trade, but not as bullish as we wanted the price to go. So if you look at this trade, before we go into trading this setup, we should know that we have to go to a lower time frame, like the 5 minutes or the 3 minutes time frame, to look at what the price is actually reacting to. So now let's go over to our 3 minutes time frame. Alright, we are on our 3 minutes time frame, as you can see here. So on our chart, you can see that after price tapped into that fair value gap around this area, there's a fair value gap around this area. If you can't find the fair value gap, you have to go to your higher time frame, like the 1 hour time frame. On our last episode, the last setup that was shown was a fair value gap around this area here, and we anticipated that price should tap into it and give us a reason for a buy, right? So after price tapped into this fair value gap right here, we need to look for our usual break of market structure. After the tapping of this fair value gap, we can see there's no break of market structure around here, and if you can find the break of market structure like this after price tapped into it, there isn't a fair value gap here. So if there was a fair value gap right here, then there will be a reason for you to actually buy. So we do not have a break of market structure around here. That is why we cannot use this fair value gap here to buy. So we need to wait for a very good setup before we can enter a bullish trade. So now we have a tap here and we have a fair value gap here. Fine, since we have a fair value gap here, we can say we found our break of market structure right here and our entry here on this fair value gap. So this is how we enter this trade here for a bullish position. You can enter here and put your stop loss right below that low that created the fair value gap, and the fair value gap has been tapped into here, and you can just take your profits here at the start of this fair value gap and at the high here, or you can equally take your profit here. And if you actually miss that trade, you can just take this one off, and there's another trade here, because one fair value gap can enforce another fair value gap. Since we have a fair value gap here that has been tapped into, so this is how we enter on this trade right here. We can actually enter here and put our stop loss here, since we have a break of market structure here, and at the start of this fair value gap you put your entry and you take profit at that same spot. And if you actually miss this trade also, I classify all these trades as just one setup. So this is just trade and a re-entry. So you can actually see that we have a fair value gap here that price has actually tapped into, and a newly formed fair value gap here. So we are anticipating that price should give us a break of market structure, which it did, and this fair value gap needs to be tapped into. So price comes down to tap into that fair value gap. So where we put our entry is just at that start of this fair value gap here. So you can put our entry here, or you put your entry here for a higher risk to reward ratio. So let's have a clearer view of this fair value gap right here. So it's better we use an extreme fair value gap for your entry here. This is a fair value gap, or you can use this one. So since we have a fair value gap here, this should be our entry, and our take profit should be at the end of that high. This high here should be our take profit. As you can see, we have a 5.08 risk to reward ratio. So that is our first trade. So let's go over to our second trade. As we all know, we need to find our fair value gap first. This is our fair value gap. As price comes down, created a supply, and this supply has a fair value gap right here. And when price comes back to this area, what do we look for? We look for our break of market structure. Now there's no break of market structure here, but I guess there was a fair value gap here, but there was no break of market structure. As you can see, market did not cross or pass any low here, but we can still wait. As we wait, we can see a break of market structure right here. Price broke below this low and also closed below it. And the next thing we need to look for is, prior to that close, was there a fair value gap? Yes, there was a fair value gap, and this fair value gap is right here. So at this fair value gap order block, you can set your entry here for a more risk to reward ratio, or you can enter here at the start of that fair value gap, so you do not miss that trade. So when market comes to this spot, you can just take your entry. Since we have our box checked, fair value gap first, then a fair value gap here, and prior to creating a good setup, we have a break of market structure right here. So that is market telling you it's want to go bearish. So now this is our entry for a short position right here on our second trade. So this is our stop loss right above the high that created that fair value gap, and our take profit should be here at the end of that very low, or you can take your profit at the start of a fair value gap here. You can see a fair value gap right here, so it's better you take your profit here. Take your profits here or here at the end of that low. So if you are going to take your profit at the end of this low, you'll be having a risk to reward of 4.5 ratio. So now let's go over to our next trade, which is our third trade. Now on our third trade, and this is a 3-minute time frame. On our third trade, you can see that price tapped into a fair value gap first here at this spot. So let's see it. Price tapped into this fair value gap here. Our entry is supposed to be at this spot here, but price did not come to that entry. Instead, price used this fair value gap here. So we move on to this fair value gap and see what price is trying to do here. After price tapped into this fair value gap, we need to be on the chart to know what happens next. So we always look for our break of market structure as usual, and a fair value gap prior to that break of market structure. So this is a break of market structure here. You can see that price closed above this high here, and we can also see our break of and we can also see our fair value gap right here. So let's highlight it. we have our fair value gap right here. Let's take it like this, like so, and put our entry for a long position. We have our entry here. Our stop loss is right below that low that created that fair value gap, and our take profit should be just above this high right here for a take profit. And if so, you can actually take profit here also, because this is a high. This is a high right here. You can also take your profit here for a second TP, and this should give you a risk reward of 2.81. So let's head on to our next trade, which is our number 4 trade. So on our number 4, we can as well see a fair value gap here. So this fair value gap is quite obvious, and you can see price tapping into this fair value gap, rejecting from that fair value gap. After price tap into this fair value gap, you see price rally to the upside, giving you a break of market structure, right? After price tap into this fair value gap, it now created a break of market structure right here. And the next thing we should be looking at is your entry. So we have 1 and 2. So your entry should be on a new fair value gap. So price created another fair value gap right here. So this should be your entry, but still you can use this order block as your entry. So let's use the order block for more risk to reward ratio for a long position. Now we have our entry, and our stop loss should be below that low or below the order block that created that fair value gap for your entry. And your take profit should be just above the high, the immediate high that you can see, and it's giving you a risk reward of 2 points. Okay, giving you a risk reward of 1.93 risk reward ratio. Or better still, you can just move on to take profit here, and this is just at the start of a fair value gap right here. You can take your profits here, giving you a risk reward of 3.16, or here a 5-point risk reward ratio. So let's go over to our number 5 trade. Our number 5 trade happened on Tuesday. So our number 5 trade is this. Okay, our number 5 trade actually happened on Wednesday. So from Tuesday's fair value gap right here, we can just extend it to Wednesday as a setup forms. So now we have a tap into this fair value gap right here from Tuesday. So the next thing we should be looking for is our break of market structure. As you can see, this is a high here. Price broke that high. After price broke the high, it also closed above it right here. All these candles closed above this previous high. Now we are anticipating that price should come back and look for any fair value gap to tap into it and move to the upside. Now let's extend this and check if there's a fair value gap. So now we can see a fair value gap here. This is a fair value gap from this candles wick to this candles wick. You can see the space between it is your fair value gap. So you are anticipating that price should tap into this fair value gap, and you can see price tapping into it. So this should be your entry. You drag your stop loss. This is your risk, and you take from your entry to this stop loss for a buy position, and you click on it, and you have your entry and your stop loss. Your take profit should be above this high right here, or you can actually take your profits here. And this take profit should be risk to reward of 4.1 ratio. So that is our number 5 trade. The next trade we can see after the number 5 is this, which is our number 6 trade. But before this number 6, you can see a tap into this fair value gap here, but there is no break of market structure above this high. If there was a break of market structure, it should have been a good entry after this break of market structure, and a careful watch as our price gently tap into a fair value gap right here. But still, it was a good trade, but not a very good trade for this setup strategy. So let's go over to our number 6 trade. As you can see, we have a fair value gap here. This is a fair value gap right here, and we extend this rectangle to cover that fair value gap, and you see how price tap into this fair value gap right here. After price tap into this fair value gap, we need to look for our break of market structure. Now we have series of candles and break of market structure right here. This is a low that price actually broke and closed below, and before this break of market structure, you can see a fair value gap here. So let's use this one we have here, extend it to this fair value gap right here, covering everything with the other block right here. And if you want a more risk to reward ratio and a more defined entry, you can just take your entry here at just this other block right here, and you set in your position for a short, and you go as the market go bearish. So now you put your entry here, and you set your stop loss right above this previous high that created that fair value gap, and your entry and your stop loss should be here. Your take profits should be at this spot right here. This is where your take profit should be, giving you a risk reward of 1.4 ratio. Why is it supposed to be here? Because this is a high and this is a fair value gap. So to be on a safe side, you can just extend it like this, and you see that this is where it should stop, because price can tap into this fair value gap right here and bounce you out, just like it did here. You can also tap into it and take you out also. So for a higher risk to reward ratio, you can as well take your TP to this low right here. Take your TP to this low right here, and that is your take profit for our number 6 trade. Now onto our number 7th trade. Let's move to our number 7 trade. All right, so this is our number 7 trade right here. We have a fair value gap here. This is our fair value gap here. price tapped into this fair value gap right here, and price also tap into this fair value gap right here. So you can see that we have trades, we have series of trades here. We have trade and re-entry, because after price tapped into this fair value gap, what we need to look for is a break of market structure, right? There was no break of market structure here. It was just a weak, so this was not actually that powerful. So but after this break of market structure with just a week, you can see price coming up back and going down to actually give you a break of market structure, a proper break of market structure here. You can see price closed below it, and when price comes back to fill in this fair value gap, it gives you a good entry, a short position. So this is just it. So you put your stop loss here, and you put your entry right here above this fair value gap, and your take profits should be at the start of this fair value gap right here. As you can see, this fair value gap here, or you can take your profits here. But to be on the safer side, when you put it at the start of this fair value gap right here, you can see how the market rejected this, how the market reacted from this fair value gap. Market tapped into this fair value gap and went back up. So it would have been a risky one, because price would have actually taken you out if it wants to, but it also created a good entry, like another entry. So now let's take this one out to show you that entry. Now remember that this is a fair value gap price tapped into. After price tapped into this fair value gap, after it's tapped into this one, so this fair value gap now created a break of market structure right here. Let's look at the break of market structure here. You see how price closed below it here and created a very obvious fair value gap. This fair value gap will be easy to sight and to trade when you put your entry right here. You put your stop loss right above this previous high. Because you have a fair value gap that has been tapped into and a break of market structure. Prior to that break of market structure, you have your fair value gap. This fair value gap should serve as your entry. So now when price comes back to that fair value gap, it gives you a short position. So now we are entering here and putting your stop loss right above this previous high that created that fair value gap, and your take profit should be here at this low right here. That is where your take profit should be, giving you a risk reward of 2.3 ratio. And if at all you have a second TP, or you want your maximum TP, you can put your entry and your take profits here at the end of this previous low right here. When you take profits here, you can see how price just took that previous low, and we have our number 7. We have our number 7 trade. So on to the next one, which is our number 8 trade. So let's look for our number 8 trade. Now this is our number 8 trade. We have a fair value gap as usual. This is our fair value gap here. After price tapped into this fair value gap right here, we are expecting price to give us a break of market structure. Now this is a break of market structure right here. This is a break of market structure, and we have for us a good fair value gap right here. So let me put this fair value gap, let me draw it from here. This is our fair value gap right here, and you can see how market taps into this fair value gap and gives you a short position from here. Putting your stop loss here right above this high, and your entry here, your take profit should be at the very end of that previous low right here. So this is the first entry for your number 8 trade. So let me show you the second entry. So this should be a second entry here. So we have a break of market structure here, and since price tapped into a fair value gap here, after this price tapped into the fair value gap, well, let me take this one out first to show you our second entry. Price tapped into this fair value gap here and created for us a break of market structure right here. You can see how price closed below this low here. The next thing for us is to look for a fair value gap. Now this is a fair value gap, you can see it cited here. This fair value gap is good for your entry. So that is for a second entry on our number 8 trade for a short sell. Now put your stop loss right above this previous high that created this fair value gap, and your entry here, your take profit should be at that low right there. So this is where your take profit should be, giving you a risk reward of 3.46. So the next trade is our number 9 trade. Our number 9 trade is just after this one here. So we have for ourselves a fair value gap right here. This is our fair value gap, and this is the order block. So a fair value gap and an order block makes a trade powerful. It makes the market is more likely to react or respect that area. So now after price tapped into this demand zone, which is a fair value gap, the market created another fair value gap, which we can actually see on a 5-minute time frame. You can check it on your 5-minute time frame. And the next thing after the tap is to look for our break of market structure, which is this. We have a break of market structure here. We have a break of market structure here. And prior to that break of market structure, we should understand that on a 5 minutes we have a fair value gap here. Alright, let me go to 5 minutes to show you guys the fair value gap. Alright, so this is our 5 minutes fair value gap on our number 9 trade. Now we have our fair value gap defined, and we take our entry and our stop loss here. Alright, so this is our long position entry here. Our stop loss should be below this order block here, and our take profit should be at this high here. this one should be our take profit, or this one right here. So this is either your take profits here or your take profits here, and this should give you a risk reward of 4.23 ratio. So that is our number 9th trade for a bullish move. Now our number 10th trade, before all these trades, we should understand that on a high time frame we have a fair value gap around this area. There's a fair value gap around this area, which is actually seen on our 1 hour time frame. But still, we can use this fair value gap here and extend it down to check what is happening here. So you can see that price actually respected that fair value gap that gave us our number 5 trade, and now it's also reacting to our number 10 trade. So since price is reacting to our since our number 10 trade is actually reacting to a fair value gap on our number 5 trade, we should just look for a break of market structure, and we can actually see a break of market structure when we go to our 3 minutes time frame back. Now we have, you see this high, price actually took out this high here and also closed above it. So that is why this is here. Price closed above this previous high, giving you a good risk to reward, giving you a good break of market structure. So prior to price giving you that break of market structure here, you can see a fair value gap here, and you extend your rectangle to that, and it gives you your bullish trade here. So this should be your number 10 trade that happened on a 3 minute time frame, and this happened on Friday. So for a higher risk reward ratio, you can reduce your entry here, and your take profit should be here or before this fair value gap right here. And if it is here or here, you can see a risk reward of 5.52 ratio, and that is you can also just put it here and have taken your profit at the end of Friday for a risk reward of 3.38 ratio. So we are anticipating a bullish move for next week, and see you guys on the next episode on the trades you missed. Peace.